Financial Argument. Follow us on YouTube.
Let's get into the economic collapse financial news. Now, we have been watching this economy. We've been looking at all the different economic sectors, and we're confirming with each one that we are in a recession heading towards a collapse. Now, the government central bankers, they're out there. They're trying to convince us that everyone is employed right now, that there's no problems, that everyone has a job. And we can see right now that initial jobless claims, they are at the lowest they've been since the 70s. I mean, it's unbelievable with the amount of people that are losing their jobs. You're trying to convince us that nobody is going to apply for unemployment. But when we look at this, we see that businesses are spending less, and they're telling us that no one is applying for initial jobless claims. We see the restaurant performance index is continually dropping, and the service economy is declining, but they're telling us there's more jobs. When we look at the consumer confidence model from Bloomberg and others, that is declining, but they're telling us that more people have jobs and less people are putting in claims. Well, when you think about this, something is wrong here. Someone is lying. Someone is not telling us the truth. And I hate to say this, but actually I don't hate to say this. The government does have a record of lying to the people. And we can see right now the government is lying once again. They're manipulating the numbers. Now, of course, they don't call it lying. I mean, if they leave something out, or if they don't mention something, if they change their calculation of the numbers, they don't consider that a lie. They consider it, oh, we made adjustments. But it is a lie, because they're making adjustments to favor their story, to favor their agenda. They're not really looking at the real information and producing the real information for the people. They're manipulating it, massaging it, so it goes along with their story. And that's a form of lying. When we look at the pending home sales, we see that, yes, we're in that seasonal pattern right now where pending home sales usually fall off during the winter. And they thought they were going to have an uptick of about 4%. And what has happened right now is that pending home sales moved up about 2%. And this is considerably slower than the same time last year, which is another sign to let us know that things are declining, not improving. Actually, U.S. mortgage applications, the activity fell to its lowest level in nearly 5 months. And think about this for a second. Mortgage activity, the applications, are declining, while interest rates are at all-time lows, something we haven't seen in a very, very long time. And with interest rates this low, they can't get the American person to go out and purchase a home. This should tell everyone something. They should tell you who is then purchasing the homes. Because if mortgage activity is declining and people are sitting on the sidelines, who's buying the homes? Well, we know who they are. Investment companies, hedge funds. They're buying tracts and tracts of homes, holding on to them, renting them if they can, and they normally hold on to all of these houses, and these are thousands upon thousands upon thousands of homes, and they do this to drive the prices up. Foreign investors are coming in. They're doing the same thing. Banks, they're not foreclosing on people. They're instructed to hold on to it. Let the people live there. Because the more houses you put on the market, the prices will not move up. And they're trying to create a bubble. And this is one way of creating a bubble. Hold back all the inventory, pretend there's no houses to be sold, and let the prices move up. We're getting another confirmation that this economy is in huge amount of trouble. Core durable goods, for the 21st straight month, core durable good orders contracted year on year. This is the longest in U.S. history outside of a recession. New orders, non-defense, ex-aircraft, well, that plunged by 1.2% month on month, much worse than the negative 0.1% expectation, and down 3.6% year on year. So this indicator right now is the longest non-recessionary contraction in durable good orders in U.S. history. What does that tell us? It tells us that we've been tracking each one of these indicators, putting the pieces of the puzzle together, and we are definitely in a recession. When we look at business spending, it has plunged by 1.2% month on month. Again, we're in a recession. And if we look at business spending, this is the worst month on month drop since September of 2008. So we can see right now that this economy, the system that we're in, it is rapidly deteriorating very, very quickly. And we can see why the U.S. government central bankers are accelerating their plans for events, accelerating their plans to cover up this economic collapse, accelerating their plans to bring the economy down in a controlled demolition. Because they're looking at the same thing we're looking at. And they're realizing, okay, it is deteriorating very, very quickly. And they know as we move throughout this year and we go into this holiday season and the sales are not good and more stores close and retail contracts, people get laid off. It's like the compound effect. Everything's going to accelerate and get worse very, very quickly. No more of this slow burn. No more of this keeping everything steady. It looks like we're at the point where things are rapidly compounding and we're going to be moving forward very quickly with this collapse. And we are getting signals that something is about to happen. Now, we look at the bond market, we look at the stock market, and the bonds, well, they're the smart money. It means that the bond markets are much larger and much more liquid than the stock market. Now, because of this, bond markets are the first to adjust to new realities. Now, bonds bottomed in 2015 of November. Stocks bottomed in February of 2016. Well, right now, bonds are selling off hard. This tells us something, that stocks are on borrowed time. Smart investors are already preparing for what is coming. Bonds are signaling a real problem is underway. Another crisis is brewing. And this is a signal that things are starting to accelerate, just like we talked about. And this is why everyone needs to get prepared and ready. I know people are putting it off saying, well, you know something, we had a great recession in 2008, and we've been talking about a collapse for a very long time, and it just doesn't happen, and you know something, I don't think it's going to happen. Well, think about this for a second. Going back to 2005, when the Federal Reserve was pumping up the real estate market at that point in time, pumping up the entire economy, blowing up bubbles. Everyone thought the economy was great. 2005, 2006, 2007. They couldn't believe that, this would ever come down. How could it? Everything's fantastic. Of course, if you look at under the hood, you would have seen everything falling apart. Now, at that point in time, they really didn't have the ability to keep it continually going. They weren't printing currency like they are today. And what they've learned from that point in time, when everything came crashing down in a split second, they've learned how to keep the economy on life support. But what's happening right now, there was a limited time. And the limited time is coming to an end. And they knew it was only a limited time, but they knew they were going to be able to do this for a certain period of time. And again, it takes a very long time to pump up bubbles. It takes a very long time to create the illusion that the economy is doing well. And this is what we've been seeing. And while they're trying to convince us that the economy is doing much, much better, we see that the underlying economic indicators are showing us completely the opposite. And actually, with the government, every time, or the central bank, every time they come out and tell us stuff, it really is always the opposite. They're incredible at lying. And we can see right now with Deutsche Bank, well, people are not sitting around waiting for Deutsche Bank to collapse. People are in the bank and they're saying, you know something, maybe it is time to get out. Now, the faster the people pull their deposits, the quicker Deutsche Bank's liquidity hits zero, which means the faster Deutsche Bank is going to collapse. Now, Deutsche Bank deposits plunged by a whopping 13% from the second quarter to the third quarter, sliding from 156 billion euros to 135 billion euros. And this is as of September 30th. Now, this was the biggest drop recorded since the bank reorganized its various divisions. It was also the lowest amount of demand deposits on Deutsche Bank's books going back to the fourth quarter of 2014 and maybe even further. And what we're seeing right now is that people are protecting themselves. They're removing their funds from these banks that are insolvent. I mean, we saw it happen in Greece. We're seeing it happen in Italy, and we're seeing it happen in Germany. And eventually what's going to happen is if you don't get your currency out of the bank, this is my personal opinion, what's going to happen is they're going to use the bail-in documents. And what I've been doing is I try to keep only what I have in the banks to pay the bills. Everything else I take out or I put into gold and silver. And I know it's difficult for many to do this, but when this system starts to collapse, they didn't create the bail-in documents just to create them and have them and to store them in a file cabinet and let them just sit there. They created them because they knew that eventually what they were doing, keeping this economy on life support, was eventually going to end and they were going to have to bring it down. And of course blame it on another group or country of why the whole economy just fell apart. And every time the economy starts to slow or fall apart, where they don't expect this to happen, you can see they already start pointing fingers. Oh, it's China. Oh, it's the emerging markets. Oh, it's Russia. Oh, then they keep doing this. And they continually do this every time the market drops or something happens. They point their fingers in another place. But going back to the bail-ins, they created this because they can't do bailouts anymore. The government said, not again. And they knew this. And it took them from 2008 to right now to create these bubbles, to put everything into place. What do you think they've been doing all this time? You think they were just sitting there going, hey, let's just create as much currency as possible and see what happens? They know what's going to happen. I mean, really think about this. We all know what happens when bubbles get too big. Yes, I know in the corporate media, in all their Fed meetings, they say there's no bubbles. They don't see a bubble. The ECB says no bubbles. Of course, this is propaganda. They know what they're doing. They know they're creating these bubbles. They have been putting everything in place to prepare for what is eventually going to happen. And that is a collapse of the system. They knew that governments would not allow bailouts, so they created a bail-in document. They created a stupid stress test, which doesn't show anything. It's complete propaganda. And they convinced the world that these banks are strong and they can handle any type of economic crisis. Really? They can? Then why are there so many banks in trouble? And we know right now, if you go to the bank and you try to get out $20,000, $30,000, can you? Do they have the currency on hand? No, they don't. Many people have tried to do this, and they can't get that currency out. So during this period of blowing up these bubbles and convincing the world that everything is fine, they have been preparing for this collapse. They're making sure that they're ready to go, and they're ready to blame another country or group on what is about to happen. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.